And the real issue here, of course, is the more that they push the rates up, the more that cliff gets a little bit steeper, that eventually the economy might go over. Because, of course, the hurt when it finally does bring to bear on the economy, on business, well, ultimately it could be more serious.
Yeah, look, that's right. I mean, what we know with economies is they're fine and then suddenly they're not. And things happen very quickly. As we saw in the global financial crisis or COVID, there's some event that will happen and that's what will suddenly derail the economies. I mean, Australia's the more concerning one with the interest rate increases because you've just got that huge proportion of mortgage holders with variable rates. And that's not something that's the case in the US or in England where, it's about 10% of households in those two countries or something like that. Don't hold me to that, but a very small fraction of home loans are variable rate. Whereas in Australia, I think it's 60, 70%. So that's a huge structural difference. And that's why you basically see the Reserve Bank with a much lower cash rate than in the UK and the US, because Phil Lowe and the Reserve Bank Board are quite understandably worried that there'll be some cash rate increase which just kind of tips enough people over the edge, and then suddenly that has a massive effect on spending and confidence and maybe the stock market too, and that leads to a recession. So I think a lot of anxiety amongst central bankers, especially in Sydney.
Yes, there's no doubt about that. There is certainly concern amongst them right now. But there's one other aspect to this as well, and that is, the preparedness of governments to deal with some sharp economic slowdown. When they've been through COVID, they borrowed enormous amounts. Quantitative easing was out there. They've now got interest rates higher. It's just whether governments are prepared for an economic slowdown.
Yeah, look, that's a very good point. And I don't think they really are. I mean, they basically blew so much money, I would say massively, excessively, on COVID support packages. I mean, interestingly, the three English-speaking countries spent the most by far. I mean, if you look at countries like Germany, Switzerland, Sweden, they basically spent nothing or very little by comparison. So I don't know why that's the case, but Australia and the US really borrowed. Well, actually, I should actually say their central banks created new money to fund the packages, and of course that's led to this high inflation. And I just don't think they can do it again. I mean, if there was another COVID, if there was COVID 25, they could not spend that much money again. So it's a real problem. As you suggest, if there is a downturn, I mean, how are they going to borrow the same amount? It was cheap in the past when interest rates were 2%, but now they're much more. So it has a huge impact on the budget. And at the same time, of course, you've got bracket creep. Severe bracket creep in Australia, which of course is the reason why you've got that surplus, basically that tiny surplus, is because the government is basically taxing the daylights out of everyone without passing a new law, which you've got wages and prices going up at a pretty solid clip. So the economy is not fundamentally strong. Even though the jobless rate is low, I don't think it's fundamentally strong, because you've got growing government, you've got increasing taxes, and you've got higher interest rates.
Yeah, I'll tell you what, it's always good to have a chat to you about this because it's really good perspective. And Adam Creighton in Washington, we'll chat to you again very shortly.